fourth revolution, discuss stocks for your portfolio of the future. And those stocks of the future are finally rushing back into market favor as this earnings season's fresh fundamentals illustrate the secular growth that a lot of these market disrupting innovators have been able to, to perform, and are showing that this new normal, this new economy that we're entering is going to be totally different than what we left behind. It's going to be driven by ease and convenience of this digital technology that is boundless, seemingly, with the innovative curve being pushed prolifically into this fourth industrial revolution, this digital renaissance that's just commencing after the digitalization of the pandemic. But let's get off topic here. We're looking at the CPI report just came out way above expectation and actually showed an acceleration in January from the December numbers, coming out to be 0.6% monthly or month over month increase in consumer prices. And then we got a 7.5, I believe, 7.5 annual inflation rate, which is the highest number we've seen since 1982, a 40-year high. And it's crazy that we're seeing a bid in high growth, which should be getting compressed under this news, especially when we see the credit markets tightening their expectations, now looking at 6 to 7 interest rate hikes from the Fed this year. And that is up significantly from the 5 to 6 just yesterday. And then we had a month ago, we were just pricing in 3 to 4. And it's interesting because we had the Atlantic Fed president come out on CNBC yesterday morning saying that we're only going to see 3 to 4 rate hikes based off of what his information is at this point. But I think a lot of this growth bid is based off the predication that we've seen just a huge amount taken off of these growth names from February. I mean, the ARK Innovation ETF was down over 80%, and they just hammered it too hard. And now we're looking at potentially peak inflation. And now investors are having a reason to jump back into these names like I said, fresh fundamentals that are showing that the secular growth of technology into this new normal is not going to stop. So let's jump into some opportunities and where we're headed next year.
The markets had priced out so much from these high growth names on this soaring inflation that they were pricing in the worst case scenario, which would be a monetary shock from the Fed. And that's kind of some PTSD from what happened in Bernanke's taper tantrum in 2013, which had market crushing effects. But what investors hadn't really been thinking about is the idea that we've already priced so much out of many of these fresh, or should I say, newly public innovators since last February, with the benchmark of innovation, Cathie Wood's ARK Innovation ETF, ticker ARKK, fell off as much as I think it was down 75%. It was down from 160 to down all the way to $65 a share. So an unbelievable valuation compression that was kind of overdone. And the worst case scenario, like I said, is a taper tantrum or any type of rapid monetary tightening increase, which would obviously have compressing effects on valuations of high growth, because high growths, most of their earnings are far years into the future. And when you take that multiplier, that denominator, and raise it up any amount, it crushes the value of these modeled innovators. And you can see this inflation here coming all the way up. And the Omicron variant has been the latest driver of January's inflation, outsized inflation, should I say. And now that it is receding just as fast as it came in merely a month's wave time frame, inflation looks like it's going to be in the rearview mirror. I'm calling a peak to inflation either this month or next month. And it's because a lot of these factors are indeed transitory. I mean, look at energy over the last, I guess 2 years since this would be a year and a half, since April of 2020, when prices actually went negative temporarily for crude oil. You can see it's just blown up with 25% annualized inflation, and oil is even higher. You're looking at gasoline, you're looking at 50% growth in prices, and this is driving a lot of this inflation, and it's because of a supply and demand imbalance. It's something that is going to be transient, something that's going to correct itself, and you can see it kind of already is. I'm expecting to see these prices decline over the next few months as supply and demand imbalances are rectified, and you can see it with some other transitory factors such as vehicles. The used vehicle market drove so much of this inflation; it's uncanny, and it's just because of this chip shortage we've been seeing in new vehicles. But it's a lot of these factors, like I said, are just transitory factors, and market participants are starting to realize that these transient factors and this notion of a hawkish Fed is so minimal when you're looking at a company with a growth outlay of 50% compounded annual growth over the next, or should I say CAGR, over the next decade. It doesn't equate. A few basis points higher in the denominator isn't going to crush a company's value when it's looking at 50% growth for the next 10 years. And that's what a lot of these innovators are looking at, especially some in Cathie Wood's market disrupting ETFs.
My top picks amid this market disrupting bounce and these next generation innovators include HubSpot, ticker HUBS, ACM Research, which is a company out of China that's really growing its capacity to build chips. And the company, or the country, should I say, is focused on that with 33% chip production increase just in 2021 alone, and expected to see 15% increase from here on out throughout the next decade. So that's ACMR as a ticker of that. TSMC, another chip play, the leader of global chip manufacturing. I love CrowdStrike. That is the go-to cybersecurity company that's driven by AI and really is unmatchable in its capabilities. And cybersecurity isn't going anywhere with this mobile world only increasing the endpoints, infiltration points for cyber criminals. And then we got Upstart, the leading company for creditworthiness. And as interest rates rise, banks are going to be looking for more ways to lend, and Upstart is the perfect partner for that reason. We got SGH, Smart Global Holdings, and its latest CEO, Mark Adams, transforming this once legacy memory chip maker into a next-gen focused AI, LED laser focused company with the best-in-class management team to bring it there, and it's really under the radar. So the valuation is really ripe for a buy. We got Twilio, just blew up after earnings, over 10% higher today, and the ticker is TWLO on that one. That is going to be an automator of the future, AI driven as well, and it is going to displace all of those overseas call centers as it automates the customer relationships between enterprises and their clients. I got SoFi. This is my final one. SoFi, I love it. Just got its bank charter and is poised to take advantage of the student loan deferment expiration as these millennials and Gen Zs look to refinance their loans at a much lower rate. SoFi is going to be the go-to place for those needs. So thanks for watching, guys. Don't forget to check out Zacks.com/promo for our latest promotion, and look forward to speaking to you guys next time.